All right, guys, Big Bear AI Stock Earnings Q2 2025. I got a preview for you and some considerations and pretty in-depth information for you about the earnings, what to expect, what to think about, what's going to happen with the stock following it, some considerations, how people might play it, what earnings risk is, all that kind of stuff. In this video, I have it all put together for you in a nice, neat little package. Also, speaking of nice, neat little packages, I have an options workshop coming up on August the 16th at 2 p.m. A limited number of seats available. People are already signing up for that. They're designed to take the absolute beginner who knows they've heard about options, but otherwise just they want to know more about them. What does it call? What does it put? How do I even use them to benefit me? Why should I even bother? That workshop, if you're interested, check it out. Down in the description, you'll find that link. Just click on it, sign on up for it, or read about it, sign up for it, and I hope to see you over there. Otherwise, guys, I want to get into this presentation here on Big Bear AI stock. And at the end of this video, I'll tell you guys a little bit more, and you guys can let me know what you think about what I have to say about Big Bear AI stock and whether or not you should be bullish or bearish, or at the very least excited about this. Let's go. Let's get into it. Just so you know, the earnings after market close on the 11th here. Let's move into the disclosures. Full transparency. I have no association with Big Bear AI, which is the ticker's BBAI or any of its subsidiaries. I have no specific inside knowledge of the company or its finances. I've traded this stock and its derivatives, meaning the options. I hold 200 shares and I don't currently have any options open as I record this video. And I don't have long-term plans for the shares. I might hold on to them for a long time. I might hold on to them for just following the earnings. We'll even see what Monday brings. If for some reason the stock runs up wildly, maybe I get shed them. I have no long-term plans. This stance may change at any time. I don't believe that I will be shedding myself those shares prior to earnings. That's not my intent. We'll talk about that as we get through it. So notes, what do we got? Estimated revenue and earnings here. So revenue estimate 40.59 million. Now after here, you'll notice it says 410.1 BME. So that's beats, misses, and breaking even. So out of the last 15 earnings that they've reported, they've beat 4 times. They missed 10 times, and they were even with expectation just 1 time. That's a vote against Big Bear AI, just historically speaking. Now, mind you, looking back doesn't always mean the same as looking forward. So, but I will say for this one, historically speaking, not necessarily a great track record for beating the revenue estimates. You know, look at Nvidia and their track record for beating the revenue estimates, or even if SoFi might be a really good example if we're going to talk about the smaller growth companies that are out there. So Anthony Noto being the grower and the shower. If you watch my videos on SoFi, you'll know that I said that. Now, mind you, the CEO for Big Bear AI, he's only been a CEO since January, so this is his first full quarter. We'll talk about that later too. So in terms of revenue growth, 16.7% is expected. That's quarter over quarter, year over year, only 2%. We'll see if we get that. And then in terms of earnings per share, the beats 3 times. They've beat the earnings expectation. 11 times they missed. A couple times pretty big because of some accounting issues. And then when I say accounting issues, it's more about the derivatives that they have in the background and the different convertible notes that they have. So just some accounting issues that cause them to wildly miss and have some pretty steep drawdowns following their earnings, breaking even 1 time with the estimates that are out there. So being at the expectation, within 1% is what I consider to be at the expectation. So estimates for growth, 24% quarter over quarter. That's pretty nice if we can get there. And then at minus 20% in terms of EPS year over year. And again, these are what's expected from Wall Street. So these are the estimates that we have out there. So moving on from there, these are not my estimates, just so you know. I'm just copying along with what has already been stated and just reporting them out to you. So for full year guidance, in quarter one, the expectation was for about 194. This should say million. It doesn't say million, but that's what it's meant. What it's meant to be. Instead, it got guided as 160 to 180 million. Not necessarily great for Q1. And then Q1 revenue was 34.76 million, and that's important here because of what it takes out of this chunk that you have from the 160 180. That means on average over the next 3 quarters, and in order to hit that revenue guidance, 41.75 million at the low end. So if we come in down below that, it's probably not going to be a positive thing in terms of the guidance, unless second half really is we have a back-loaded year instead of a front-loaded year in terms of revenue. Now, mind you, the second half of 2025 is supposed to be the bigger half, so it's not necessarily a deal breaker to come in at the low end of that. But it does start to get really exciting if we come in at the midpoint or higher, especially if we hit the high end during Q2 and the back half is still expected to see much more revenue coming its way. So we still have a back-loaded second half of 2025. That can be really wild for us. So we have anything from kind of not the most bullish that we come in at the low end of this, although not bad, as long as the second half is still supposed to be great. Now, mind you, if they increase this guidance, especially if they go 200 million plus, that should be very green for us, because that would put us above the revenue estimate for 2025 and 2026. 2026, as per TradingView, shows that 190 million. So coming in above that 190 million for 2026 would be that we've pulled forward significantly, or I should say the BigBear.ai has pulled forward significantly on those revenue expectations. And so that full year guide, it does mean everything. If they lower this, that's not great at all, because they've already lowered it once. Now they're lowering it again. If they raise it 190 plus, honestly, 200 million would be very exciting in my opinion. And then we'd also have to take into context what they have to say for the revenue. So it is going to be a complete story thing, and we'll talk more about that story as we build out here. Now, about that $385 million backlog, it is a 30% increase from the previous year. So it's nice to see that backlog, because it can talk about their demand for their services. Now, in terms of being funded for that backlog, there's still about 20 million left. And then you'll notice the asterisk that's right here. This is the change from Q4 2024. So in December's report that we got, until we got the report for March, the quarter ending in March of 2025, they actually realized about 26, almost 27, 26.5, $26.6 million in that funded revenue that was able to make it onto the top line of their financial statements. Now, for the unfunded version of this one right here, only 2 million in change. So it was 72-ish million. Now it's 70 million from December to March in consecutive quarters. So that funding not necessarily moving through too quickly. And we did have some important changes from that happened between December and March. And we'll talk about what's happened since that March quarter as we get through this, and as we get more into who the CEO is and what his connections are and all that kind of stuff. And then priced and unexercised options. You'll notice out of 385 million, this is 270, almost 279 million, with very little realized or exercised and changed, whatever you want to call it, about 4 million changed from the previous quarter. So what priced unexercised options are is, hey, this is what we've talked to companies about, but they haven't taken us up on those offers yet. We don't have things inked in place that they're going to actually enlist our services, but those services are available. And then for unpriced, unexercised, it's kind of that they were in discussions, but they never really put any effort into writing down some hard numbers for that in order to actually have that acted upon. So probably this unpriced one is the least reliable of it. So if we take away that 15-ish million, then we're down to about 370 million. And then in terms of this is the big one here, to take the price, if we get that converted into either funded or unfunded, as long as it makes it down to these bottom two categories, this could be very good for us. Now, because it is so government heavy with the contracts that it has, the unfunded thing is an indefinite part for seeing when that revenue should hit, because it's contingent upon that funding being available from the federal government. And so that's a concentration risk that we face. And that's one thing that's going to be downward pressure on the stock, or keeping it from being as successful as it could, having that concentration risk. And that's one of the reasons why they're looking to broaden out and expand. So let's move on from there, from that backlog. I will say for the backlog, it is very promising. It would be nice to see, like I said, these priced unexercised options turn into unfunded and funded. I think that would be seen as progress and could be seen as even potentially upward pressure for the stock. So let's move from there into contracts and partnerships that landed in Q2 of 2025 or got announced during that time. So April 1st to June 30th. The biometric screening at airports, absolutely huge. That got announced as per their investor relations page on June 17th. The partnership with Easy Lease and Vigilix in the United Arab Emirates, June 11th. And they're both in yellow because they should be immediate revenue drivers. I don't know how much. That was never disclosed, but I do believe that they will. The collaboration with Analogic, June 10th, that was announced. That could actually be a revenue drag because it doesn't say that there was any sort of money exchanging hands. It just sounds like it's a team up, if you will, which could actually mean that money gets sunk in investment wise, but it doesn't necessarily mean that money's going to come out of it immediately. So that's something to keep in mind. And then the collaboration, the Space ISAC member, again, that could be more of a money sink more than it is a revenue producer. So that's why it's not in yellow. So these other three, the next three are in yellow. So collaboration with Hardy Dynamics. That one, I believe they're serving as a subcontractor, so that should land directly in the top line of their revenue for Q2, which is perfect. I don't know the nature of it. It was never disclosed, but it is something that was announced that partnership, that BigBear.ai does serve as a subcontractor for that one. So Hardy Dynamics being the contractor. So deployment of Shipyard AI for Oslo, USA, April 24th, that was announced. So still in Q2. Collaboration for Smith's Detection, April 7th. And I believe that one I was a little bit iffy on coloring it yellow. I believe it should hit the top line on that one. The deployment for the shipyard, that one should absolutely, as best as I can tell, hit the top line revenue. So it's nice to see all this Q2 stuff coming in on top of the previous recurring revenue that they had, or previous, I should not recurring, but the existing contract revenue that was coming in over that time. The United States Army contract that was announced last year should continue to pay. And then plus there was another announced contract this year. We don't know when that hits the top line. I think that was a $13.2 million contract, but it's over 3.5 years. So that one was announced during Q1. That's why it's not on here. Now, mind you, down here in red, going too fast. There we go. Collaboration with Defcon AI, July 31st. Now, mind you, that's Q3. That is not Q2. That's why it's in red, but I thought that it was important, worth mentioning, just to say that they have more, not necessarily partnerships, that's a little bit more official, but more collaborations coming that I believe are going to be important. So I know that one's outside the date range. I want to toss it out there because it could be something, if mentioned during their earnings call, we could get some flavor on it and see if it translates to at least the top line revenue. We do eventually want to see it turn into a growth story on top line and bottom line. And right now, we just don't really have much of that. Now, about the CEO himself, first full quarter as Big Bear CEO. I think it was January 15th of this year. It was definitely January of this year. 15th is the part I'm uncertain of. So he was there for most of Q1, but this is the first real full Q2 that he's actually been present as the CEO for. Now, mind you, he was the CEO of Pangiam. I think that's the way that you pronounce it, Pangiam. That was acquired by BigBear.ai in 2024. So he was already internal to BigBear.ai. Now he's just more in a leadership role. And if you look through his credentials before that, former acting secretary of Homeland Security, appointed by President Trump. That's huge right there. I should have put it in yellow. Appointed by President Trump, major connection in current administration is what I said there. And we had the big, beautiful bill land, which has some defense language in it, or language for, I should say, money marked for specifically for defense that could translate into BigBear.ai's pockets. We don't know that the disbursements are out yet. We don't know if the disbursements are going to go to them, but I will say when you look at the U.S. Customs and Border Protection, especially concerning the ports of entry that he worked with and the area port director, there's the airport connections. It seems as though that Kevin and I'm going to Macalinen, like I said, I've been up for a long time. It is now 2:01 a.m. as I record this. Kev, I'll call him. He seemed to be able to capitalize on his connections. This guy's been in the defense side of things in one way or another since following the 2001, the September 11th, 2001 disaster that we had with the Twin Towers and all that. And he even got recognized in 2005 for the work that he did towards, I'm struggling to remember right now, but I pulled up the article there. In any case, I think it was a Civil Engineer Award, maybe. I would have to go and look at it. But the work that he did in securing the borders for the United States following the September 11th attack. So this boy's been at it for a long time, and it sounds like his connections that he has in those areas, he's really been able to capitalize on. And hopefully that gives them a foothold that actually builds out their credibility and their exposure. And they also have a tie-in that Vigilix, that one that I talked about. I'll go back over here for you. This one right here, the Easy Lease and Vigilix in the United Arab Emirates, that's part of their international expansion, if you will, which honestly could still be tied in a lot of ways to his connections in government work that he's done so far. But that could also spill out to other governments around the world as well. And it could continue to turn into further contracts, further deals, further partnerships for them. And it would be really nice to take away some of that concentration risk and start to broaden out from there. And we have the beginning evidence that some of that could be happening. So I think that's pretty good. So let's move on from there. There we go. So which way will it go? Bullish or bearish? So here's some bullish stuff. The CEO connections appear to be fruitful so far. That sounds great, and it's looking great. We'll keep our fingers crossed that it's actually hitting. If it doesn't hit the Q2 revenues, does it hit the guidance? Does it hit something that that gives some sort of promise for the future that it's going to be very, very green for Big Bear AI? If so, then that is in the bullish category as I have it here. Reasonable expectation for revenue growth and increased fiscal year guidance. I think because of the different connections that he has, the partnerships that are being made, the collaborations, the different contracts that are floating out there, the biometric screening that has been implemented into the airports and around the different ports of entry. That could also be very good for them as well. And expanding, and I mentioned that down there before, that those are the reasonable expectations for that. Now, bearish for them, a major portion of their backlog is priced but unexercised. So it's like, hey, we did the workout for this to talk with you guys, that should you take the option in order to enlist our services, this is what it's going to cost you to do it. What do you think, guys? What do you think? Let us know. We're ready. We're ready whenever you are. Well, we just need those people or those entities to be ready to take them up on that. Until that point in time, it's nice to see. It's like, hey, the money could be floating out there, but I would absolutely love, instead of seeing it being priced but unexercised, I want to see it get exercised, and I want to see it go to either funded or unfunded. I think if it makes it down to that part of it, I would take that from red and I would turn it to green in a heartbeat. History of revenue and earnings underperformance against estimates. They don't have a great track record. Now, mind you, a little bit about the CEO shift. The CEO really does make a huge difference in who's running the company. Now, mind you, Pangiam was private, so we don't really have financial history on it. It would have been nice to know. It was acquired for $70 million. I think it was an all-share transaction. So cash didn't directly change hands, and that just shares of Big Bear AI stock did, I believe, is about how it went down. But if we point to just some other CEOs are out there, imagine NVIDIA without Jensen Huang, right? Imagine SoFi without Anthony Noto. Imagine Palantir, since it gets compared to Big Bear AI, without Alex Karp. Like, if it wasn't for him, like, the guy is so wild and eccentric and obviously brilliant that him being that vision leader really brought Palantir to the forefront. Now, mind you, their quality was there for a long time, and he may have had a large part in bringing that to fruition. However, making it to the commercial side of it really does, I think, in my opinion, I think he really does sell the company that Palantir doesn't cost companies money, it makes them money, and that's an excellent value proposition. So that investment that they're making, if it turns out that it makes the companies more profitable because they're able to run that much more efficiently because of Palantir software, that's a great thing. So with Big Bear AI, the CEO can make a huge difference there. Does he have that sort of that charisma and attitude to really bring a Big Bear AI to the forefront? That story is yet to be told. We have to find that out. And in terms of the business that they do, the clientele that they have, the institutions or entities that they're collaborating with, are they really setting up to make that same promise that Palantir is? At this point in time, no, but I'm going to at least say for right now that it's very, very early in stages for a thing, not only for Kevin as CEO, Macalinen. I'm going to go with that as his last name, Macalinen. Not only with him as CEO, but also in the development of the company itself. And it's also doesn't necessarily have the same. I don't know that I want to say that Palantir had the first mover advantage, but I want to say it's a very early mover advantage. And BigBear.ai is stepping in at a time that the market could be a little bit more saturated, that there's more competitors coming into the space. So it's going to have to get some teeth and claws on that big bear in order to really tear through this. So it had its work cut out for it. Now, mind you, we'll see in the after hours today what we get from that. Now, I do have one other thing, just some considerations, some final thoughts. The first one is that earnings risk is real. There's a reason why a lot of people don't take positions for trading positions near earnings, because it can be an absolute coin flip. So I'm not going to sit here and pretend that, guys, I know that this thing is just going to blast off after earnings. I think that there's still potential that it could. If I had to put percentages to it, I feel like it's 60-40 or 65-35. So 60 bullish, 40 bearish, or 65 bullish, 35 bearish. That I don't have enough evidence to believe that this thing's going to be the absolute rocket ship that we want it to be initially, but I think there's enough evidence to believe that it could be. And depending on what the options market looks like for BigBear.ai options, calls, puts, you name it, I'll make my decision. I'll share it over at the Discord. You guys can go ahead and check it out over there. And I'll talk about it here on YouTube, but my video for YouTube for what decision I make won't happen until earnings have already happened. So at that point in time, then you guys will know. So let me put this back up here. Other things, if the stock pumps prior to earnings, it could make more for a more likely for a drop post earnings. And the reason for that is that the higher that this thing rises up, that's the more likely that we're pricing in excellent earnings. So the earnings have to be that much more excellent to go even higher, if that makes sense. To compare that to SoundHound, which recently, yeah, it was up, but it wasn't wildly up already at a near-term peak. It was actually down a few dollars, like $2 from its peak. And then it was able to push higher. The earnings came out and they were astounding. They were great. I think it was like a 33% revenue beat, among other things, for SoundHound. And so for them, they were able to take that rocket ship up. Well, if we rocket ship up during the market day tomorrow, then the earnings have to be that much more stellar in order to keep that going. So if we go up to $8-9 per share before we get the earnings, well, then I think that we could have the sell the news events afterwards, that they could be great earnings, but the market could have already priced in great earnings. It would take stellar earnings in order to continue to even go higher from there. We might still have the potential for $10 to $15 per share. We're going to have to watch and see. I said before, it's a momentum-based stock. It's going to definitely be based on the different news that we hear. Earnings could be one of those catalysts that puts the momentum into it. We just have to watch and see. So that's what I have to say for another consideration. If the stock pumps post earnings, there's possibly share dilution immediately on the heels of it. And that's because it's a profitless company. They said that they have money to run them through the next 12 months in their last earnings call. Well, what about the months that go after that? Why wouldn't you take advantage of an elevated share price in order to do a capital raise, which could lead to share dilution, and then the stock would drop as a result, if you will. So that's something just to watch out for. Even if we do rise up sharply, just check out what happened to SoFi. That popped up to $25 a share and then pulled back pretty heavily, and then pulled back some more in the after hours as it got announced that they did a capital raise pretty much at 4 p.m., maybe 5 p.m. at sometime very soon after the market closed on the day of SoFi's earnings. So be aware of that. The stock trades, the major trades on BBAI stock are likely volatile plays in the market on Tuesday. So remember, earnings risk is real, but after the earnings are known, well, then that volatility can take place the next day. And if you're a momentum trader, for example, if you want to take advantage of some options plays afterwards, if you're going to go long options, which means that you're the buyer of those options, the holder of those options, they could be a lot cheaper because of a volatility crush. We'd have to watch and see what happens. Now, mind you, if the stock's moving wildly, maybe that doesn't necessarily happen because then it's volatile anyway. A little less time value on it though, and then you're also less of a wild card because you know what the what the earnings were and know a little bit more about how you can play it. You could also do the same thing with shares if you're buying and selling those shares. So if you're interested in that day trade side of things, post earnings is probably going to offer you that volatility that you want for such a thing. So also straddle option plays, they may turn out to be profitable. I think that this thing is positioned, this stock price is positioned in a way that we could move significantly from where we're at right now, that we could have wildly outperforming numbers for revenue, for guidance, for earnings, and this thing, shoots off to the sky for us, which would be enough volatility potentially that it would overcome the $1.50 to $2. We're going to have to look and see what the near the money calls and puts are in order to see that expected move. Last I looked on Friday, it was $1.43. Was the expected move that it had. So we'll have to watch and see. I think it's probably going to be closer to at least $2. And so that could take a straddle option where you buy a call and buy a put for with the same strike price. And it could turn out to be profitable. It would be mitigated though, because one goes nearly worthless while the other one moves into money. And if it doesn't move enough, then you just lose money. And people don't like to lose money. And so that's why earnings risk is real. And some people choose not to trade, especially options, prior to earnings. They don't want to span that earnings date with those options. Last thing that I have on here, single direction options need to be right and move enough to survive the volatility crush to become profitable post earnings. So you could even choose, let's say it's a call option, it goes bullish. Does it move enough in order to, if the volatility drops out of it, did it move enough in order for you to make money anyway? So you have to consider your break even in that, because you could be right and still lose money on the option play, especially if you go near term option where you have that theta decay rapidly against you, for example. And then the other thing is that maybe it falls and you chose put options, but it didn't really fall enough to really survive that volatility crush, for example. Then you lose money anyway because the option just got devalued because the same volatility wasn't there that was there before that allowed the premium to be up as high as it was. So guys, my thoughts and consideration on Big Bear AI earnings. I'm still leaning to the bullish side here. I still think that there's a large chance that we get some outperformance somewhere. It might not be this quarter. It might show up in their guidance. It might be that we get higher guidance going into the second half of the year. So I think that there's a good potential that we see it hit the top line revenue. I think there's a good potential that we see increased guidance from here. Hopefully that's the case. But there's definitely some history there and some reasons to be a little bit doubtful that it's going to translate as directly as we would like it to. And so we just want to be aware of all that. And that's my goal here, is to make you guys aware, not to tell you to go all in and this thing's going to go to the moon, because we don't have that evidence, and I would never tell you what to buy or sell anyway. I'm also not going to fearmonger you and tell you that you should just dump all your shares and get rid of everything before the earnings happen, because once again, we don't know that that's the appropriate call either. You guys get to make your decision. I just hope that the information that I shared with you helped you to make that decision a little bit easier, whether you choose to stay in, get out, or you choose to do something with the options, or choose not to. I hope that my information was at least helpful to you. All right, guys, just a few things before we wrap it up. One, if you want to see my trades on Big Bear AI, make sure that you check out the Discord. It links in the description. Check out my expert channel. Once you get over there, you'll only get it with the earner tier. Use code word doctor when you sign up. It's going to save you some cash. Also, I have an options workshop coming up to take the absolute beginner and get them to the point where they are ready to buy their first call option, buy their first put option. That workshop is about an hour long. There's people already signing up, limited number of seats. There's even a designated Q&A session to follow it, so you guys can check that out. It is coming up very soon, coming up this Saturday, as a matter of fact. And like I said, limited seating available. And there's also some coursework if you learn about trading options, if you want to learn about technical analysis, if you learn about trading using technicals, you guys can check out that coursework down in the description as well. Every link that you want is down there, ready to go. Code word doctor is going to save you cash on that coursework as well. And bundling the courses gives you a bundle discount on top of the code word doctor discount. It's the best deal that you're going to have, and that workshop is wildly valuable. Stockmo also teaching leading a workshop, I should say, on technical analysis, and then Crypto Will leading a workshop on crypto, of all things. You guys should check it out. Those guys are top notch, and I gotta say, I bring a lot of value to the space with what I know about options and what I can teach you about options during that workshop. So guys, thanks for watching. Let me know what you think about Big Bear AI in the comments of this video. Are you excited about their earnings? I know that I am. Otherwise, guys, I'll see you over in the Discord. Hope to see you in that workshop. I am Dr. Stock, Doctor of Education. Remember, my friends, that learning is earning. We'll see you next video.